to the show. This is Psycho Silver. My name is Jerome. I do thank you for joining me. This is my second time shooting this introduction because I did it once already. And I said, so many times that I was disgusted with myself. And I said I better do that again. I got pretty good at stopping saying, but then it came back. Anyhow, I wish and I hope that you're counting your wealth in ounces. It's very important right now. The people with the most wealth are counting their wealth in ounces. Banks, institutions, entire nations are counting their wealth in ounces, gold particularly. But not in every case. We do have the instance of India importing nearly 300 million ounces of silver this year. And nearly all of that is for a store of value. That is their method of choice for storing value in India. And it's not Bitcoin, it's silver. And that's that way. It's that way over the whole world. I'll say good things about Bitcoin. I'll say bad things about Bitcoin. I'll say true things about Bitcoin. So here's one true thing. About 1/3 of the world still doesn't have internet. And in all those places that they don't have internet, silver is still money. But at the same time, the wealthy 2/3 of the world does have internet, and they're learning to call Bitcoin money, but I have my doubts. What's interesting about India is they're progressing pretty rapidly, and right now they're the second most populous country in the world, and they're set to be the first most populous country in the world in the next 8 or 10 years. Pretty surprising. But we do some crazy things with our money here in the West. One of the things that we're going to do today is hop over to Wall Street Bets and see the carnage of young men, it's always men, gambling away their life's savings, their life's fortune. And they are fortunes. I know there's many people on the internet, they would call $20,000, $30,000, $80,000 not that much. And I'm sure many of those people are very lucky and very talented, skilled at earning money, but that's $20,000 is a fortune. And you see it routinely gambled away on Wall Street Bets. And I can only speculate as to the mindset of these young men. I would believe that they're bored, probably heartbroken in some sense, probably experiencing greed. And I think a huge motivator is they want to show everyone how smart they are. Because we do see the winners. The winners are going to be like 10 times more likely to post. Imagine if it was you and you bought a bunch of Tesla puts or something like that and you scored big. Yeah, I'm going to go to Wall Street Bets and show everyone how smart I am. That's just how people are. And so you do see the losers there, and there's probably 10 losers for every one winner. That would be my guess. And we just do see with young men in the westernized world, so much disposable income, and they're throwing it all away. I'm sure it's just being swept up by the banks, the big institutions, and the sophisticated traders. And I do respect a sophisticated trader. They earn their money legitimately, but it's kind of not more than a hustle. What does a trader add to society? Liquidity? Okay, fair enough. Market makers, the traders and the scalpers are market makers. Anyhow, we got some other things we're going to look at. We're going to look at silver, of course, because we're a silver channel. We're going to look at some geopolitics and certainly the biggest story of the day, of the week. This is huge. We're nearly at war. Things are on fire in Brazil. We have elections coming up. What else is there? I know there's a whole bunch of other things, but the biggest story by far, at least to me, is the 75 basis point hike executed by Jerome Powell. Has Jerome Powell gone rogue is the question. I did a short earlier talking about the stay behinds of the Obama administration. You have John Brennan, you have James Comey, and many, many others that stayed behind and did their best to subvert, to undermine, to sabotage, to criticize Trump at every turn. And they succeeded many, many times. But is Jerome Powell Trump's version of a stay behind? It does appear that these aggressive rate hikes executed by Jerome Powell are wreaking havoc throughout the world. And you do see the EU begging him to stop. NATO begging him to stop. I think the Pope said something like, hey, knock it off. Is that true? I think so. Even the Pope brought it up. So it appears that he's dancing to a different tune. I'm still trying to figure out this situation. I don't know quite what to make of it, but my initial impression is that these very aggressive rate hikes are possibly the only thing that could save our currency over the span of the next 5 or 10 years. Because if we just continue down the path of hyperinflation, well, it would be done a lot sooner. And so the US debt, US dollar denominated debt, is a fulcrum of strength that we can still wield. And we pretty much need every point of strength that we can muster because the petrodollar is dying. We've seen our allies abandoning us, particularly Saudi Arabia, which was the other half of the petrodollar. We've seen the inability to collect participants in executing the sanctions against Russia. There's been too many that I can't even keep count, but there was Japan and there was India. I do believe Turkey is in there somewhere. All of them dependent upon Russian energy and unable to aid us in upholding those sanctions. We see countries abandoning their dollar-denominated debt, at least in the extent that they can. And we see more and more deals being struck outside of the dollar, and many development plans being based on other currency. And of course, the big one we can't forget is the BRICS and their impending currency system. And with all that, we do see Jerome Powell making moves that appear to have the strength to help salvage the dollar at least for another 5 or 10 years. And these rate hikes are making him extremely unpopular all day long, or I would say more than a day. I would say for at least a week before they executed on the rate hikes. Many Twitter feeds and YouTube channels and talking heads that were just wanting so bad, wishing for a pivot, calling for a pivot, hoping for a soft pivot. Just give us a little. At least don't do it by as much as you said you would. And usually these things are so boring to talk about, but to see the way he has just been defiant, and even in the press conference that he held when he announced the rate hikes, they were like, well, what about next time? Will we get a lower hike next time? Will you promise not to hike more than X? And he's saying, no, we're going hard. And of course, he's making it about inflation, and that is his shield. And that's what gives him the basis to do what he wants. But could it possibly be about much more than inflation? Could it be that he's exercising power to disrupt the EU? Could it be that he's biding time for the US before the dollar dissolves? Is this in the sunset time of the American empire? The ruthless reign of the dollar coming to an end? I guess we're going to know a lot more by where we go in the next 6 to 12 months, but it does appear to confirm with a great deal of certainty we are headed for a recession. All other nations that are carrying US denominated debt are also headed for recessions. There's going to be more liquidity crises. There's going to be more failure in unstable debt markets. The issues with the gilt, the UK bonds not going away. The issues with the Bank of Japan, this is just going to further intensify those problems. And it kind of is what is needed if you did somehow want to remedy the zombie corporations, the excessive derivatives, the cheap money finding its way into bad hands. But it's been suggested over and over that it's already too late. Well, is it actually too late? Maybe not. But anyhow, there's my 2 cents. Why don't we jump into and here we go, as promised, with our opening article here. We do have this article from CNBC. It says Fed rate hikes could go even further than expected as Powell commits to stomp out inflation. Stomp it out, Powell. A hawkish Fed chairman, Jerome Powell, vowed to beat inflation and said the central bank may have to raise rates more than expected. That sent stocks lower and bond yields higher as traders bet the Fed could now raise rates above 5% before stopping. And I will note, he said that he's willing to go a lot further than that. The Federal Reserve left the door open to reducing the size of the rate hikes as expected. And even that last bullet point there, they're saying, yeah, he left the door open. Maybe the next one won't be as big. They're like just hoping. I guess I don't have much more to add to that. I already said what I can say. But it was pretty hilarious watching the questions from the media, and every other question was just a different phrased question to try and get him to say that he would pivot or not raise it by as much or when it would be over. I do expect at some point they will have to villainize him, but it's tough because he's cloaked as the guy that's gonna tamp down inflation. So it's going to be tough to attack him when people have been hit so hard with the inflation. I mean, ultimately, I suppose the blame lands on Biden for now. And maybe perhaps that's one of the reasons that they haven't really attacked him as much as they could have for raising these rates. But we're going to keep an eye out on this theory that Jerome Powell is a stay behind America first guy. Maybe that's just naive to think, but it feels like something is happening. And of course, I felt like we have to get into the UK a little bit because they did have so much trouble with their bonds market. Bank of England expects UK to fall into longest recession, longest ever. Bank of England has warned the UK is facing its longest recession since records began as it raised interest rates by the most in 33 years. It warned that the UK would face a very challenging 2-year slump with unemployment nearly doubling by 2025. Bank boss Andrew Bailey warned of a tough road ahead for UK households, but said it had to act forcefully now or things would be a lot worse later on. I'm just wondering, when's the last time you saw the government tell people we have to be firm now, that we have to buckle down now for comfort later? We've never delayed gratification. This is so funny. I don't quite get it. Even though this is the UK, same story in the Americas. By raising the rates, the Bank of England is trying to bring down soaring prices as the cost of living rises its fastest in 40 years. Well, I think we get the point by now, but it's going to be pure carnage. All the issues, I doubt the underlying issues that we saw with the UK bonds and the gilts. Those underlying issues are still there. And how high do the rates go before those same issues just get pulled, the curtains get pulled apart again, and we're looking at the same set of problems as before? And here you have it. One of the interesting side effects of the higher rates is now you're paying way more on the debt, and the debt was already out of control. And now it's just more out of control because more and more of the budget is going to pay the debt. This is an article from Epoch Times. It says interest on government debt set to exceed total annual defense spending. The United States is on pace to spend more to maintain its debt than its own military. In the third quarter, the federal government spent over $184 billion on interest payments on its debt. That means the annual cost is over $730 billion. Meanwhile, the Department of Defense 2020 budget was about $720 billion. Interest payments have skyrocketed over the past 2 years with massive increases in spending during the COVID pandemic, and then due to interest rate hikes enacted by the Federal Reserve in an attempt to curb inflation. I really don't think this is completely about inflation, guys. Maybe it is, because people could just straight out revolt if the inflation gets too bad. I think what they need, if they were going to just go ahead and hyperinflate, which I just believe to be the plan, is they're going to need some other type of emergency excuse to do it. I wish they gave us a bigger graph to look at, but here you can see it. This is the cost of the debt. So this is just the interest payments. And look at that. Yet another parabolic vertical chart going straight up. And that is one of the main problems with accumulating so much debt, is the interest on it becomes unmanageable. All right, let's move on. Here's a news article. I didn't know quite what to make of this, but it was just so darn interesting I had to include it. This is from the Business Insider. They write, Apple is now valued more than Alphabet, Amazon, and Meta combined. So that's Google, Facebook, and Amazon. More than all of them combined. What I did write on Twitter is the pocket computer is more important than the stuff that's on the pocket computer. The iPhone maker's worth stands at 2.3 trillion, while its tech peers only adds up to 2.3 and less trillions. And I do believe that tech is just completely overvalued compared to the real world. And that will probably have to level off as people pay the real price for energy, the real price for industrial metals, for food. All the commodities are going to come back with a vengeance because we rely on those things. But if there was one area of tech where I have to admit, like, it's completely indispensable, it is the pocket computer. And when will we finally stop calling phones and calling them something else? Your personal computing device. Someone's going to come up with some good marketing and change the way we speak about phones and give them an updated, maybe it'll be iPhone that does it because they're not even phones, right? It'll be like a nifty piece of marketing. Who can finally turn that corner and rename those things into something interesting. And we did see this is a result of a pretty stiff sell-off in the equities. Do we want to have a look at that chart? Let's have a look at that chart real quick. Why don't we have a look at the Dow? There you have it, 5 days worth of the Dow, and they did spike up before the announcement and then they crashed way down. Max view of the Dow, and we do have a ways to fall before we hit that trend line, but I do believe that's where we eventually go, down to that trend line at a minimum. And as promised, I do have a brutal post from Reddit. Some poor kid, I'm sure, down $26,878, 81% of his portfolio. And what was he buying here? He had AMC, meme stocks, of course. And let's get into those comments and have a laugh, why don't we? This user writes, the market knows your moves and is waiting to fuck you hard once the bell rings. The next user writes, just start a new account with a different trading brokerage and you won't have to see the losses. It'll be as if they never existed. Great advice. He didn't say stop gambling your money. He said open a new account and pretend it didn't happen. This user writes, you're doing options wrong. The point is to limit downside, not increase it to unlimited. Oh, this mod writes, I'm not surprised that your portfolio is down 80% this year. You clearly don't know what you're doing. It's freaking brutal, guys. And there's a few more of those we can have a look at. And I did want to bring up really quickly, we do have an article here from Reuters. It is published today, and it writes, Vietnam to require 24-hour takedown for false social media contests. So they're gonna put you on timeout for sharing false content now. And who determines what's false? It says here, they are worried that false news, if handled in a slow manner, will spread very quickly. What more can you say? It's always the same shit. Maybe there's some comments we can have a good laugh at. Of course, they remove the comments on an article like this, right? We did dodge the possibility. They did announce that disinformation governance board, and they abandoned that for now, but I'm sure they'll find a way to bring it back in the fine print of some other emergency bill or executive order. And of course, I had to amuse myself with this a little bit. Here's an article from Forbes. They say Biden, 16 million in forgiveness loans applications are already approved, but relief is on hold due to Republicans. How many times are they just going to dangle this in front of people before they just get sick of it? Here we go again, right before the midterms, and they're dangling the student loan forgiveness, hoping you're going to vote for them. I guess they're doing that believing that they're not even going to have to pay, right? Because then they're just going to blame the Republicans. I'm almost sick of even reading about that or speaking those words, but it's like it comes up every few weeks, and then especially more during election season. I wanted to replay this old video of Alex Jones. He's talking about silver. Let's have a look at this cool video. This is from quite a while back. But it's a good video. I want to play it again.
It is a relatively small stock, and it's already caused tens of billions of dollars of loss by these hedge funds that were planning to bankrupt it. Scares the system for a much bigger reason. GameStop scares the system for a much bigger reason. It is a relatively small stock, and it's already caused tens of billions of dollars of loss by these hedge funds that were planning to bankrupt it. If the people on Reddit and on Facebook and across the world ever realize what's happening with silver, and they are realizing it, it's game over for the globalists. They are trading hundreds and hundreds and hundreds of times. Usually it's about 200 times the amount of paper silver that there actually is real silver in the world, and they use that to manipulate the price and hold it down anytime it starts going up, because then they can dump limited amounts of their paper silver, and it creates the illusion that silver actually doesn't have value, when really silver is hundreds of times more valued than what it really is. You understand? It's a real, tangible commodity that's used in construction, that's used in electronics, that's used in microchips. It's been valued for over 6,000 years. Again, silver is the #1 target to bring down these criminals and to expose the fact that the whole system's a fraud, because they are leveraging 100, 200, 300, sometimes 400 or 500 times more silver paper in the market to suppress the value of silver, to basically short it, and then make billions and billions of dollars every month doing it. So if that gets exposed, that they're engaged in basically fractional reserve banking manipulation of silver, it's game over. This is the Achilles heel. It's the soft underbelly. It is the kill shot. It is the target politically to expose these criminals.
All right, I hope you enjoyed that as much as I did. I like to rewatch that every once in a while. He makes points so well that even though you kind of knew what he said, it's still entertaining to watch again. He's certainly a master. that Alex Jones is. And here we got some more red meat from Reddit. Oh, this one's a meme. It says, stop raising rates. And this is Jerome Powell. You know what? I'm going to raise even harder. That was a good one. And that totally fits with the theme of this show. I think I'm going to have to save that meme and make it the thumbnail tonight. Okay, here's the red meat. Once again, from Wall Street Bets. This user writes, decided to invest my savings when I turned 20 because of this sub. Notice how he said invest. I just turned 21. Here's my year in review. Make this uni kid feel bad enough to do something about it. And let's see, he's got $8,900 left and he's down $15,000. That's a fortune. He's down a fortune. He's lost enough money where he could have had a reliable car for the next 10 years. Let's read some comments. This user writes, do what you did before you turned 20. That seemed to work. Don't do what you did between the ages of 20 and 21. Next user writes, don't worry, it'll be gone before your next birthday. Oh, the guy under him says, and it's gone. Next user writes, you still got 8.9K more than me at that point in life. Fair enough. This user writes, boy must have had the most lit bar mitzvah to be having 24K at 20 years old. Yeah, that's a fortune. That's a lot of money. He could have done so much with that. He could have seen the world. He could have traveled around the fucking world with that much money. He could have started a business. He could have paid like half a tuition for a good college. This user writes, the cool thing is you're young and you have a long time to learn how to invest. They're still calling it investing with your major earning years ahead of you. It's not investing. These guys are completely misguided. All right, here we got one more. This was the biggest one of the evening. This user writes, down and out real bad. Where do I go from here? Down $33,731 or 99.9% of his portfolio here. He writes, options kill me. Started using them. And man, does this hurt. GameStop, AMD, Tesla. Very sad, guys. This user writes, one thing about options is once you lose it, it's gone forever. Next user writes, the dumpsters behind Wendy's. Russian troll writes, you'll have to do what men and ugly women have had to do since time immemorial. You'll have to work. Oh, finally, someone smart did leave him the phone number to a gambling hotline. Finally, someone helped him out a little bit. All right, that's enough of that shit, but I still like looking at it. I admit it. Here we have a post from Michael Berry. He says, follow the Fed. Never forget the fall of 2021 when Fed governors suddenly decided in a Nostradamus move that it was unethical for they themselves to hold and trade in stocks. And I didn't quite understand what he meant about this, but yeah, they did make it a rule that they themselves had to divest from their stock positions in the fall of 2021. I didn't know that. And here's the kicker. You do have a reply from Unusual Whales. He writes, it's true. Reminder, members of the federal traded stocks that the Fed was buying in 2021 at the very bottom before the bull rally. And this is where they sold at the very top before the Fed raised rates and were cleared of any wrongdoing. Wow, is that true? Guys, look how perfect this chart is. So allegedly that's where they bought. You can see the little green arrow here, and that's where they sold, the perfect bottom and the perfect top. I don't even know if I should believe that. That's like too perfect. What do you guys think? We're going to have to do a little more research on this, aren't we? Here we have an article from the Zero Hedge. They write, gold market roiled as mystery buyer waves in 300 tons. 300 tons is a lot. That's like as big as a nation would be buying. The Fed has tightened its monetary policy in its most aggressive pace in 40 years. Real rates in the US have soared. Historically, that has reduced demand for gold. But as the chart below, gold, while notably off its highs, has not cratered as much as one would expect. It's because you have strong buyers of gold, right? With that weight of selling, I was a bit surprised that gold wasn't weaker, says Ross Norman, chief executive of Metals Daily. But thanks to a normally dry research paper from the World Gold Council, perhaps we know why gold has not fallen so much. Despite the recent price slide in paper precious metals, physical demand and prices remain extremely high. Who'd have thought physical could affect the price? So weird, right? And then here, as we mentioned earlier, central banks bought 399 tons of bullion in the third quarter, almost double the previous record, according to the World Gold Council. What do central banks know? The tricky thing, though, as Bloomberg reports, just under a quarter went to publicly identified institutions, stoking speculation about who got the mystery buyers that were waved in For the other 300 tons of gold in Q3, it's a mystery buyer. Wow, this has got to be the headline of today's episode. Mystery buyer of 300 tons of gold. Few have the capacity to undertake the third quarter buying spree, even to soften the blow from investors selling bullion as the Federal Reserve hiked rates. Here are some possibilities of who the mystery buyer could have been. China, the world's number 2 economy, rarely discloses how much gold is in its central bank. The country hasn't reported any change in its gold hoard since 2019, fueling speculation that it may be buying under the radar. Oh, you can believe that. For China, the need to find an alternative to dollars, which dominates its reserves, has rarely been stronger. Yes, of course. We also have the possibility of Russia. Russia is the world's second biggest gold mining nation, typically producing more than 300 tons a year. But since the invasion of Ukraine, Russia's gold has no longer been welcomed in the West, while China and India have been reluctant to import huge quantities. That raises the possibility that the central bank could step in and buy those supplies. But Russia's overall foreign exchange reserves, including gold, have declined this year. Well, how do we know that? Russia's reserves of dollars and euros were frozen by sanctions, making it less attractive for the central bank to add them. Moreover, it doesn't break out its holdings of gold separately. Yes, of course. Or was it India? Are they buying all the gold and all the silver? India's central bank has made a large gold purchase before, buying 200 tons from the International Monetary Fund in 2009. Since then, it's tended to buy more gradually while providing timely updates to the market. So is it China, Russia, the Saudis, or India, and why? Simply put, the analysis on duration shows that gold is a relatively safe place to be in the currency cycle, and maybe the whales are moving. Or, more ominously, perhaps the mystery whales know it's coming, or fear something that Western nations prefer not to consider about the New World Order. Holy smokes, this zero hedge is scaring me. I'm scared, guys. Here we had an excellent tweet from JC. JC writes, "Of course, COMEX gold and silver inventories declined today. It's just an inexorable, fierce extinguishment of the remaining inventory. And when we wake up one day to limit up in precious metals, nobody should be surprised." Love that tweet. I wish I could pin it. Maybe I can't pin it to my page. This was a really important tweet, guys. This is from Santiago Capital. He writes, "The U.S. government cannot fund itself at 5% forever." He's talking about 5% interest rates. But it can fund itself at 5% for a lot longer than the UK can fund itself at 4.5. A lot longer than Europe and China can fund themselves at 3. And a lot longer than Japan can fund itself at 1%. Big things are happening, guys. I don't know why they're doing this, but I do believe that it is dealing a blow to the European Union. What does it mean? Let's have a quick look at this little 2-minute clip. And like I was joking earlier, they were begging Jerome Powell to just give us a whiff of a pivot, man. Come on. Let's check this out.
And bond markets are reacting positively to your announcement so far. Is that something you would wanted to see? Is that a problem, or how that might affect your future policy to see this positive reaction?
You know, we're not targeting any one or two particular things. You know, our message should be, what I'm trying to do is make sure that our message is clear, which is that we think we have a ways to go. We have some ground to cover with interest rates before we get to that level of interest rates that we think is sufficiently restrictive. And putting that in the statement and identifying that as a goal is an important step. And it's meant to put that question really as the important one now going forward. I've also said that we think that the level of rates that we estimated in September, the incoming data suggests that that's actually going to be higher. And that's been the pattern. I mean, I would have little confidence that the forecast, if we made a forecast today, if we were doing an SEP today, you know, the pattern has been that one after another, they go up, and, you know, that'll end when it ends. But there's no sense that inflation is coming down. It just, if you look at I have a table of the last 12 months of 12-month readings, and there's really no pattern there. We're exactly where we were a year ago. So, okay. So I would also say it's premature to discuss pausing, and it's not something that we're thinking about. That's really not a conversation to be had now. We have a ways to go. And the last thing I'll say is that I would want people to understand our commitment to getting this done, and to not making the mistake of not doing enough, or the mistake of withdrawing our strong policy and doing that too soon. So I control the.
Man, oh man, that is such strong language. He said withdrawing policy. He said that like almost I would expect a military general to be using those words. And maybe that's how he feels, because these interest rates really do affect lives, you know? And so in these decisions that he's making, a lot of people will get hurt either way. And so I'm sure he carries that weight upon him. But that was ultra hawkish, not even a suggestion of a pivot or slowing down. Could it be that they really are that worried about inflation completely crushing the Western economy and America? Seeing as how we're losing our allies, that would basically be a death blow if the inflation really got out of control. And I don't even think it would have to get to the point of hyperinflation. I think that if it was just sufficiently bad, that that would be the end of the dollar. We'll still have something called the dollar, but the dollar system as we know it would basically be over. I got a couple more memes for us and we'll call it a night. No, you can't just raise interest rates into a supply shock. You're increasing the risk of recession and stopping business investment. Look how much you've tightened policy already. No. Money vacuum go brrr. And here we had a meme that was posted by Lynn Alden of all people. With the meme game, go Lynn. She writes, they have no idea what interest payments on 31 trillion of debt looks like. Oh, only nerds get that one. Only economic nerds get that one. And I did want to give you a quick reminder that we are seeing steep drops in the LBMA vault as well. It says hodl apes there. Whose hand is that? Do you recognize that picture? Whose hand is that? When did that happen? And you see this downward trend here. That's the LBMA vaults getting drained. So it is the COMEX and the LBMA together. And so you know this the silver squeeze is really on. And with our final slide of the night, you do see COMEX silver here registered unmoved. I never believe it when I just say that it's a complete wash. What are the odds that it's just completely zero for the day? It doesn't make any sense. But we did see a little more get taken out of the vaults, and they are officially under 300 million ounces of silver on the LBMA vault, or excuse me, the COMEX vaults. And so that's a milestone of sorts. But we're watching the register a little more. And with that, I do thank you for joining me. I hope you enjoyed today's episode. I have another one coming for you tomorrow, and I'm doing a lot of shorts. I do hope that you are in good health. And if you're not in good health, I hope that you get better soon. And thank you for watching the show, and I'll be back very, very soon. Goodbye. News.